Hello everybody, it's Jeremy Whaley here. It is February 21st, 2022, and I'm going to do a little workup of where I see the market going for the remainder of the next 6 months or so. We're getting ready to have a big sell-off, I think. So we're going to talk about that in this video. Let's go. All right, everybody, how you doing? I kind of have to do that intro so we have the disclaimer in there. Otherwise, I wouldn't make you watch that every time. But anyway, it's great to be with you. I wanted to do a little workup on the market and where I see things going. It's actually February 21st, 2022 right now. Wanted to get this video out a little bit earlier, but I'm still going to get it out before the market opens tomorrow. We were closed today because of President's Day. But we got a lot to talk about. And I haven't done a big public forecast on this maybe ever. I don't think I have actually pushed one of these out, but that's how critical I think this is. And I'm actually planning on doing more updates along the way here, just simply because it is such a critical time, in my opinion. So I have some stuff that I want to share with you that I've been forecasting in the market and where we're going. And so far, we've been spot on with all the forecasts. So, yep, let's go take a look at it right now. So what you're looking at over here, this is actually the Dow Futures. And if you can see it, which is going to be really, really hard right now, but if you can see it, you're down 413 points right now as I am doing this video. And of course, well, now it's down 417. So it's falling as we're talking. The candlestick that you're concerned about is this big old red one right here. And I'm going to zoom in on it so you can hopefully see it just a little bit better. And I know depending on what size player you're watching this on, you know, if like you're on your phone, this is going to be just awful hard to see. But if you can see that, there is a long upper candlestick shadow right here. And that's actually what happened during the day. And this has had a big reversal during the day. We were trying to be bullish for a little bit here. In order to get that candle, what had to happen? Well, we opened right here. Okay, we opened there. And in order to get that upper candle, we had to actually trade all the way up there at one point. So it was a bullish candle. But then the bears came in, drove it back down. And now the bears are solidly in control. And they're just kicking booty here. We also have a lower shadow. We were down over 500 points at one point. Now, why am I talking about this? Well, first of all, these are the futures, so anything can happen overnight. You know, tomorrow morning, everything could be totally different. By the time you see this video, everything will be different. But go ahead and mark it, come back and watch it, you know, reference it, because you're going to see how accurate we are with this whole forecast that I'm about to lay out for you here. And the reason that I'm making a big deal about this is because I've been forecasting this time frame since November, exactly since November. And if you're out there on YouTube and you're out there, you know, watching different people's forecasts, a lot of people are calling for a market crash for different reasons. A lot of them are saying, well, it's just too high. It just has to crash. Not true. Remember this, the market can stay irrational a lot longer than you can stay solvent. A lot longer, okay? So people are just sitting here saying, well, we're going to short the market because it's just too high. Well, that doesn't make any sense, and you're going to find yourself probably losing your shirt. Some people are saying it for other reasons. You know, we got political reasons that people think the market's going to crash. We have legitimate fundamental reasons people think the market's going to crash. The reason I'm looking at it is from a technical standpoint. And that's the argument that I want to make with you right now. And, you know, for any of you who may not be as familiar with my philosophy of how the market works and how we trade, whenever I do a market analysis, I always work with technicals, because as we think about the fundamentals of the market, all fundamentals do is they tell us what theoretically the price should be worth. In theory, if all these numbers work together and if everything is accurate, in theory, this is what the value should be. That's the fundamental argument. The problem with theory is not fact. And like I just said, the market can be irrational a lot longer than you can be solvent. So what does technical analysis do? What does technical analysis do? Technical analysis looks at what's actually happening. It's the fact of what has actually happened moment by moment. And we get an update. We get a snapshot literally second by second in the market, tick by tick. And so we know what the public sentiment is and how people are approaching and how they're feeling about the market at that time. So let's come over here. And what I want to do is I'm actually going to switch over now. This is the Dow Futures that you're looking at. They're down, like I said, 400. Now they're down 444 points. Nasdaq Futures at this moment down 300 points. S&P Futures down 65 points. So that's about 2% on most of those. 1.5% on the S&P futures. I want to go back to the Dow Jones though. And what you're going to see here, I'm going to actually just kind of lay out an argument for you for the bearish case that I haven't done for you guys. But you're going to see it now because it's time. It's time. And I started making this argument back in November. And if you can see on the chart, let me try to make it big again. I'll try to remember to do that when I do the charting part here. Right up in here. You see this part right here? That was back in November. If you can see that peak and you can come down here to November, this is when my eyes started to see this forecast that I'm about to walk through with you. And I actually, at that time, forecast a head and shoulders, a chart pattern that we call a head and shoulders. And as we got into December, as this sell-off started to happen, and I have the recordings to prove this in case anybody's like, oh, you're making that up, you didn't forecast it. I have the recordings to prove it, and I had all of my Sunday Night Profit Picks members that were witnesses to this forecast that I did. At that time, I forecasted that we would probably sell off to about where this purple line is. We would find support, and we would rally, and I said that we would put in a new lower high. Now, if you look at that, and if you know anything about chart patterns, let me change my pen color. You know anything about chart patterns? That is a textbook head and shoulders. Oh, look at that. Look at that. We got on the left side over here, we got a left shoulder. On the middle here, we got a head. And on the right side, we got a right shoulder. You can't get no more textbook than that, kids. Yeah, so this is a textbook head and shoulders. Now, for those of you who may not know what a head and shoulders is, let me explain it to you. A head and shoulders is a bearish reversal pattern that occurs in the market every once in a while. Now, this one happens to be showing up on a daily chart. That means every candlestick that you see on here is actually representing 1 day of time frame in the market. Well, how did I know this? How did I know that we were going to start to have this big market top? And every time the market would sell off and people start freaking out, oh, we're in bear market territory now. We've heard all these scary things. And how did I know that we weren't quite there yet? I'm going to show you right now. So what we're going to do is we're going to take a trip over to a different time frame. We're going to stay on the same chart. This is the Dow Jones Industrial Average. But I'm going to change the time frame. Instead of being on a weekly chart, I'm going to come up here in TradingView and I'm going to change it to, instead of being on a daily chart, I'm going to change it over to a weekly chart. Now, voila, we just made the change. All right, I'm going to rescale this because it didn't scale very good to start us off. There we go. Now what you're seeing is every one of these candlesticks is no longer a day, but rather it is a week of trading behavior. Okay, so every one of these is no longer a day, but it is a week of trading behavior. And that means that this red candle that you see where my cursor is, if you can see where my cursor is, that red candle is an entire week of bearishness. And you go before that, and that candle is an entire week of bearishness after trying to be bullish. And the week before that was a week of bullishness, but it turned around towards the end of the week and has a long upper shadow for that candle. So these candlesticks are telling us a big story of sentiment that's shifting right now before our eyes. But let me show you what I was looking at that I started noticing back in November that I was very cautious about at the time. And I do this a lot of times. This is kind of one of my gifts, is to take a big picture view of the market and say, these are about the 3 or 4 possible things that could happen right now. And we can really anticipate within a pretty narrow range of what the possibilities are. And so this was one of the possibilities that I saw. What I saw happening at this time is I saw that we put in a peak. Hopefully you guys can see that. Let me go full screen there. We put in a peak back here in September, and we put in a new peak in November. And if you go back to May, we had another peak. You see those 3 peaks? Well, now since then, we've had yet a 4th peak. That was the December peak. Well, here's the thing. You can draw a line straight through there, okay? And that line represents, I'm just going to abbreviate this, HH. It's higher highs. In other words, every peak that we've had in the market has been a higher high. Okay, so that should be bullish, right? That should show that this trend is continuing higher. But if you look straight down on the chart, you're going to notice that the corresponding peaks on this indicator, and this is called a stochastic, the corresponding peaks are going straight downhill. In other words, this indicator is bearish with lower highs, while in this case, the index itself is making higher highs and is bullish. Well, Houston, we got a problem. That's not the way it's supposed to be. These indicators, the way that they normally track is they should be basically confirming what you see in the market. And what we're seeing here is we're seeing that the indicator is going the opposite direction. That's actually a loss of momentum. That's what we call that, because this is a momentum indicator. So while the market is putting in higher highs, and while a lot of people are very optimistic about the market putting in higher highs, what's really happening? We're losing momentum. Yeah, the market's putting in higher highs, but we're losing momentum. Now, I'm just going to, when I see that, first of all, you don't see it very often. You just don't see it very often. But when I see that on a weekly chart, my little antennas go up and I say something at a big scale is happening. We need to look at this. So I started looking at this back in November. And back in November, when this happened, at that time, let me change my pen color. At that time, I forecasted, because at that time we had this peak, pulled back, this peak, we pulled back. And at that time, I actually forecasted a lower high. I didn't forecast the higher high. I forecasted a lower high to here, and then I forecasted that we would drop back down. Well, instead, we put in a higher high, and now we've dropped back down. So I was one cycle short, and that happens. I mean, that happens often. That, the pattern just extends a little bit. So just because we were a cycle short doesn't mean anything. But at that time, I started forecasting that we would drop down below this pivot area around 34,000, and it would scare everybody. And then we would rise, we would rally up to about the pivot area. And I said we would kind of hang out there for a while, and then eventually we would sell off. And my minimum target is, I'll just give you the punchline. My minimum target is about 28,000. That's my minimum downside target. It could be a lot more, but that's my minimum, 28,000. Okay? Now, I said at that time, this was back in November. I said at that time, none of this was going to happen until February or March. And I said this back in November because I was just drawing it out and saying this is what the pattern should look like. And as of November, I said I was anticipating we would start a rally somewhere around March or April, and it would be completed by May, and the big selling pressure would start around May or June. That's what I said back in November. You say, why in the world would you forecast like that? I'm so glad that you asked. It's not because I'm just making numbers up. And, we change these things on a week-to-week basis. So this forecast happens to have been relevant ever since we laid it out there. And ever since we put this out on whatever that day was in November, so far everything has just been precise, almost within the week. It's been ridiculous how precise it's been. But, we do update these on a week-to-week basis because things change from a week-to-week basis. But the reason I want to bring your attention to something here is I want to show you, I'm going to actually add a couple more indicators on this chart. And I'm going to show you why this was such an alarming situation. What I've just done is I've just added two more indicators. On the top, you see, of course, the top, you see the stock itself, or in this case, the index. Then you see that stochastic I told you about, and you see that bearish divergence. Now look right below it. This is a MACD indicator, and look at that. We got more bearish divergence. And look right below that. We have the RSI indicator, and we have more bearish divergence. In other words, it's 3 for 3. 3 of the 3 oscillators that we work with, 3 for 3. 3 of them are forecasting bearish divergence, or they're presenting bearish divergence. That shows a loss of momentum. Now the reason this gets my attention, I mentioned a moment ago, this doesn't happen very often. The reason this got my attention is because if you sit here and you go back in time, which we're going to do now, the last time this happened, was in 2015, and it's hard to see on here, but I'm just going to draw it so you can see it. We had a bearish divergence on all 3 oscillators and on the index. And that led to a 700, 900 point day that followed within just a few days. Okay, if I were to zoom in on that, which we don't need to necessarily, but there was a bunch of those little peaks, those little valleys you see in there, if you can see them, those were huge, huge selling days. Freaked everybody out. One night we went to bed, the market was down, futures were down a couple hundred points. We wake up, futures down like 700-800 points. It was nuts. And the next day, it was so bad that they were talking about, they actually started having that circuit breaker conversation. Is it to the point where we have to slow everything down kind of thing? Of course, we never got there. But if I come on back, I think the next one we get to, I might have missed one in here, but I think the next one we get to, we had a little one here. It wasn't huge, but we had a little one in here, and that one also led to a bearish move. And again, these look pretty small because it's a weekly chart. But I mean, you zoom in on a daily chart, and that's huge. But the big one I want to bring your attention to happened in 2007. And this is the big one. Now, whenever we think about 2007, most people don't think too much about a market crash in 2007 because it didn't happen. Market crash did not happen in 2007. When did the market crash happen? 2008. But when did the reversal happen? 2007. And it happened throughout the entire year. And this is what I've been modeling and looking at for the last several months that I wanted to bring to your awareness here. We are almost precisely within the exact same model of what happened in 2007. And we've been in that model for several months now, really since March of 2021. And it is now getting to the peak of that. And I want to go to 2007. I want to zoom in on this, and I want to show you what I'm looking at. Okay, again, I'm still in a weekly chart. This is a big, big scale, folks. You're not going to see, the reason I haven't done this video before is because you're not going to see this stuff play out in the next 2 or 3 days. Now we might be because we're actually getting there now. But, when we first started seeing this, you're not going to see that happen. So if you look back in 2007, you can see the date at the bottom of the screen here. This is 2007. See if I can get my pen to cooperate. There it is, 2007. And what you're going to notice is starting around, May, we started to get a very strong series of higher highs on the index and lower highs on the oscillators. You see that? Now, what's interesting about that is this topping pattern that happened. It happened for several months, and it did not really break to the downside until January, February of 2008. Well, that sure is interesting, isn't it, folks? That's kind of where we are right now. And then what you see, and I'm going to flip my pen color yet again so you can really see this. This is, again, on a weekly chart, big pattern here. What you see is you see this double top pattern that time, and it sold off, and it came back and it tested it, and then the big selling pressure came in. Now, this move right here, this was the beginning of the big bearish move. We had already established a bear market, but nobody knew it yet. We had already established it very, very clearly. That happened, folks, in June and July of 2008. We were a year into this reversal before anybody figured it out. Well, I don't want to say anybody, but before any of the media figured it out, before the average person figured it out, we were well into that. And then the big selling came. Okay? Now, you say, was there any way we could have, people ask me all the time, Jeremy, is there any way technical analysis would have prevented me from losing money in 2008? And the answer is, yeah, it told us. It told us exactly what was happening. Now that I've zoomed out a little bit, you can see this in even better clarity. Higher highs. My pen is possessed. I would say I'd throw it away, but it's software. How do I throw software away? Higher highs on the index, lower highs on the 3 oscillators here. Very clear bearish divergence. We have not had this strong a bearish divergence since 2015. And the 2015 move, just a few days later, we were within a huge sell-off in 2015. And then before that, it was 2007. That's big, folks. That's huge. Now, in 2007, you can see that it sold off, 50% approximately. Now, something else happened at the bottom, and I'm going to go ahead and just draw your attention to that. We actually had the opposite effect. We actually had what we call bullish divergence. While the index was making lower lows, the oscillators were making higher lows. And that reversed us in the other direction. So that's another phase. I'm just going to show you now the S&P 500. I'm flipping the chart. We're now on the S&P 500 as soon as it loads here. So now you're looking at the S&P 500. That looks awful, doesn't it? Let's resize that one. Here we go. We're going to rescale that one. We're going to come back in time to 2007. And I'm going to show you the way that this same time period shaped up in 2007 for the S&P. There it was. It was a slightly higher high, but we still had our divergence in here across the board. And in the same way, we had the selling, the rally, and then ultimately the continuation of the trend. And there's a lot of other signals that were happening that confirmed this reversal. And there was a lot that was happening, okay? But it was all right there. Let's look at the Nasdaq during the same time period, okay? And during the same time period, back in 2000, where were we? 2008. Here it is, 2007. Okay, here's what the Nasdaq was doing. I'm going to highlight this. There's your head and shoulders, just like what we're seeing on the Dow right now. Left shoulder, head, right shoulder. Higher highs. There's your matching highs on the MACD and kind of matching highs on the RSI. So we didn't really have the divergence on two of these oscillators, but we still had the reversal pattern. And you can see the formation as it dropped below support, came back up, pounded into resistance, established a new range here, and then the bottom fell out. Okay. Now, why am I showing you all this from 2007, 2008? This can't possibly have any relevance to today, right? Oh, I don't know. Maybe. Let's come back into modern times now. And what you're looking at right now is you're looking at a price chart for the Nasdaq. With lots and lots of other lines on here. But you're looking at this price chart for the Nasdaq currently. And folks, this bearish divergence on the Nasdaq has just been in play forever. I mean, all of 2021 practically. More recently on the RSI, but the MACD has been diverging for almost a year, and the stochastics has been diverging since, a good 8 months now, 7 or 8 months. We don't have the clean pattern up here. This is interesting because the Nasdaq has been the really unique one that has just run amok, and it has already made the sell. It's already been pounding into this testing point right here, and it's really ready to continue the bearish reversal. It's already done that. Let's look at the S&P 500. This is on a weekly chart still, okay? And on the S&P 500, take a look, folks. There's your bearish divergence across all three oscillators. Boom. Putting in the patterns for the top. These are topping patterns, folks. Now, the reason I'm doing this video is I want you to be aware of what I think is coming in the market. What I don't want to happen is I don't want you to get messed up and never see it coming. I don't want you to believe the hype that markets always go higher. I don't want you to believe the people that say, the market can't go down. It's just not true. The markets go up and they go down all the time. And what you have to do, our job as traders, is to be prepared for that. And I'm not going to tell you what you need to do with your money. I might give you some ideas, but I trust that you are educated enough to know what to do with your money. But you probably want to know my market forecast, so that's what I'm going to share with you right now. I'm going to switch over, moving from a weekly chart back to a daily chart. Okay, so I'm back to a daily chart now. We're going to fix our scaling because for whatever reason, when I make that move, TradingView doesn't like it and always jacks it up. I'm going to get rid of a couple of these oscillators because we really don't need them for this part of the analysis, and it'll clean the chart up a little bit for us here. So that's why I'm getting rid of those guys. And now what I want to do, now that I've come into a daily chart again, this is the Dow Jones on a daily chart, and I'm just going to sit here and tell you what I expect is going to happen. We have been consolidating basically for a year. Now, if you don't know what that term means, a consolidation is basically a time period where the trend has lost momentum and people are trying to figure out which way this thing is going, and you're stuck. You're basically stuck moving between support and resistance. Now, in this particular case on the Dow, it's interesting because you could really call this an expanding triangle. I don't like expanding triangles. They're hard to trade, and I don't know that this one is really of much relevance, but when I draw the lines on there, that's what you see. What I think is a lot more relevance is the fact that we have just now, in the last few weeks, finished off putting in this period of multiple tops. Whether you want to call it a double top or you want to name it something else, I really don't care. But we've put in this pattern now. And what we've done on the other side is we've put in a lower high. Now, those three peaks that I just drew, if you were to draw a line all the way through that, it sure looks a lot like a head and shoulders. So that's what I'm going to call it. I'm going to call it a head and shoulders. If you want to call it something else, that's fine. What you're going to see next, if I can zoom in a little bit on this, zoom in here. Again, I'm still in the Dow Jones Industrial Average. What you're going to see next is you're going to see that as we rally up to these moving averages are basically functioning as a resistance. And we drop below it, and they are starting to form the next wave of this trend. That corresponds to this stochastics oscillator that is moving down very, very quickly here. You see that? In other words, all the momentum is to the downside. My forecast for the Dow Jones Industrial Average, you ready for this? My forecast is that we're going to sell off to this pivot area, which is around 34,000. And I do believe, and this is the reason I'm doing this video right now, I think this is probably it. I think we're actually going to blow through it this time. We may not, but I think we're going to blow through it. How far we're going to go, we will look at those forecasts in a minute. But the general structure is going to look something like this. We'll come back up. I do believe we will test that from the bottom. And eventually, we will continue selling. Timing-wise on this, I think this selling, that wave of selling, I think will happen somewhere around mid to late April over to mid-May. So somewhere within roughly that 4-week window. Now let's talk about how far we think this thing is going to sell down. I think the first wave of selling will most likely head down to around 33,000. Okay? Roughly this pivot area right in here. It could go all the way down to this pivot area here, which is 32,000. Either one of those are very, very good targets. And it all just depends on how fast it goes. So it could look like that. It could look like that. You just need to be ready for some volatility, folks. Okay? Now, in terms of the big picture sell-off, how far does old J-Dub think it's going to go? Well, I'll show you right now. This trend has never retraced. This trend from the beginning or from the bottom of the Corona 2020 sell-off, this trend has never retraced. Okay? That whole move. So at a minimum, I'm thinking a 50% retracement of that wave. 50% of that wave. Okay? So let's just throw a little fib on there and we'll take a quick look at this and see where that throws us. You're going to be shocked when you see the truth. Wow. That throws us smack dab. 50% retracement is exactly on that peak that we had in 2020. It is right smack in the middle of this trading channel right here. Puts us right around 28,000. Okay? 28.5 on the high end, maybe 26.5 on the low end, but 28,000. This is my minimum target. I really do think we're going to get there. Now, this could change because we haven't fulfilled some of the other things that need to happen before we get there, but 28,000 is my minimum downside target for this bear market that I think is coming up. And that's going to be scary to a lot of people, but not as scary as the next wave that I think could happen. And I think that would be a move down to roughly where we were in March 2020 after the Corona cray-cray. Okay? And that puts us around 18,000. Now that is a 50%, better than 50% sell-off from where we have been. And that's going to really freak people out. And I don't think it's going to get a lot worse than that. Some people are forecasting way worse than that, but I'm not. And I'm going to show you why. I'm going to go back to a weekly chart here. Okay? And if I go back to a weekly chart, I have to really go long ways out here. This is the interesting thing. Because this big cycle has not shown up except for really in 2008, and then we had a little bit of it here in 2015, there is a legitimate possibility that we have to forecast this as a retracement of this entire wave. Okay? Now, this is not my first forecast, but I'm throwing this out there as a real possibility. And when we put that on the chart, when we do a fib retracement of that, where that lands us, 18,000 is right there. Boom. Look at that. I mean, that is spot on. That is the strongest support on the entire chart is right there at 18,000. It's the strongest fib support. Okay, now let's go to the 50% of that one, and that pulls us up to 22,000. So that is also going to be a potential target. And then, interestingly enough, right around 25. I'm giving you big fat round numbers here. And then here's that 30,000. So it's going to be interesting to see, once this bearish wave, this next wave kicks in, which I think could be happening this week, it's going to be really interesting to see where that first major support comes in. If it happens to come down to this 30,000 level, I think we're probably going to say this picture right here, this grid, which is on that kind of level of a super cycle, I think this is going to be the picture that's in play. So it's a very interesting time here, and I'm not doing this to scare anybody because it's certainly not my heart. I don't send out panic videos often, and this isn't a panic video either. This is just hey, here's what I see happening. Let's look at the S&P 500. The S&P, here's what I see going on with that. I've already got some fibs on there, and you can see where this goes. I won't go into the details of the pattern, but if we just retrace this full wave from 2020, which is yet to be fully retraced at all, that puts us right around 3,600. That's your 50% retracement on that. And the Nasdaq is the interesting one because it's already moved. I mean, it's already moved big. And this is the picture we see on the Nasdaq. I just changed the chart on that, and you see that we've already put in a top. We've already actually bounced up to this major pivot area right here, and we've already started to roll down to the bottom side. I think this week we may find support at 13,200, but if not, our next target is 12,000 for the Nasdaq. All right, and everything is pointing in that direction. Now, I did this same analysis last night for my my Profit Picks group. That's my Sunday night group. It's part of my Trade Maestro members. I just did this for them, and I went a little bit more in depth. That's why you see some of the stuff still in the chart from that. What I did not have at my disposal last night when I did that for them is I did not have the benefit of the futures from today. Now, today was President's Day. The market was closed, but futures markets were working. So I want to actually go back now to where I started, which was the futures. And here you look at your futures, and my goodness, we're down over 400 points. See, we didn't have this data last night when we did this forecast, and now we're seeing that momentum. Now, something else that's going to happen is, I always tell people this, when you see a big scare event, the news media is going to tie a news story to it. I promise you it has nothing to do with the market. I've been forecasting this since November. I've been forecasting almost within the right time frame. I mean, not exactly to the day, but within a couple of weeks, plus or minus. So the market, it was heading here. Technical analysis was sending us here. It told us where we were going. And here we are. It's happening. And what's the news cycle? The news cycle right now is Russia, Russia, Russia. We're going to have war between Russia and Ukraine. And people are now saying, you're seeing the headlines overnight. We're seeing the headlines, war with Russia imminent, market selling off. I just saw one on the Apple phone before I started this. Futures down 500 points as Russia's about to destroy Ukraine, or whatever their headline was. Don't pay attention to the headlines, folks. Headlines are there to scare you. They're there to grab your attention. What I want to help you understand, and hopefully this is what you're getting from this video that I'm putting together for you here. What I want you to understand is, number one, I want you to see the big picture forecast. I want you to see what could be on the horizon. And then I want you to have the courage to say, I'm not going to just sit around and let things happen to me. I want you to have the courage to pull out your 401ks and your IRAs and think about this. Now, I'm not telling you what to do because I don't know. Your situation is different than everybody else. Okay? For some of you, you're already sitting in cash, or you might be sitting in metals or something, or bonds, and maybe you don't need to make any adjustments. For others of you, maybe making an adjustment would be the worst thing you could do. So you need to kind of think through it. You know your financial situation. I don't. I'm not here to give you financial advice. What I'm here to do is tell you what I see. My 22 years as a trader, my time as a technical analyst and as a teacher and somebody who's spent just an ungodly amount of time in these charts, this is what I see. And so you say, well, what can I do? Well, if I see the market selling off, what can I do? And I want to give you a couple of ideas of what you can do. And I'm not telling you this is what you need to do because you have to decide what you need to do. And I don't know what you need to do. I truly don't. You got to know. But I just want you to have some options, because what I don't want, what's the worst thing that can happen is for you to see the market crashing and feel like I'm a victim. There's nothing I can do. The market's selling off. Oh, there goes another 20%. Oh, there we are down 50%. I don't want that to happen. I'm not saying it's going to happen. I can't guarantee what's going to happen. I have no idea. I have a forecast. Okay? But what I don't want to see is I don't want to see those emails from people that I got in 2008 where people were saying, I just lost 50% of my retirement. Or the emails that I got in 2020 when the markets were crashing because of Corona, and I had people telling me, they'd lost 50, 60, 70% of the money that they had set aside because their financial planners left them in the trades. They didn't have any kind of proactive move because, of course, they didn't see it coming. Nobody saw it coming, even though the charts anticipated. The charts said we're going, we're moving. So what I'm telling you right now is the charts say we're moving. And if we start breaking below these support lines, and I'll tell you the critical levels on your Dow Futures is around 33.7. Critical level on the industrial average, that pulled up here, is 33.8, 33.7, same price range. These are the critical numbers. When you start seeing closes below those support levels, start thinking about what can I do? Don't wait until the carnage is laying all over the floor. So let me give you a couple of ideas. One, you can just go to cash. There's no harm in cash. The worst thing that happens if you go to cash is one day you buy back in. That's the worst thing that happens if you go to cash. And I know somebody's going to say, but the dollar, there's so much inflation right now. I can't afford to go to cash. Well, you can't afford for a 30 or 40% sell-off to hit you. That's what you don't want to afford. Okay, so we're below the averages. We've got all the signals to get out of the bullish trade. It's okay to just sit on the sideline in cash. You could be in treasuries. I don't feel super strongly about that. But the other way you can play this, and this is what a lot of my students are doing, is you can look at the inverse funds. If you need a bullish trade in a bearish market, if that makes any sense, we can look at ticker symbols like SDS, which I'm going to make a full screen view now. And if you look at this chart on SDS, you say, my goodness, that looks good. I mean, it looks like we just put in a bottom and it looks like we're ready to rally. Oh, come on, let's jump on this train. Yeah, folks, you know why? Because SDS is an inverse fund that holds the S&P 500. You see, when I flip this chart over and I show you this to you, most of you, if you know anything about trends, you say, man, that looks like a great buying opportunity. Well, if it's a buying opportunity on SDS, it's a guaranteed selling opportunity in the S&P because these are it's the same thing. It's just flipped upside down. And I went back and did some numbers on this. And if my forecast is correct, then the possible targets for a 50% of the previous move, not 50% of the market, 50% of the previous move, should put SDS roughly in the $72 range. Okay, now, I don't care how you play it. You can decide. You definitely don't want to put your whole account into it. Absolutely not. Don't do anything foolish. I mean, that would be foolish. But, if you want to take some money and say, I'm going to carve out a little bit and try to make some money with SDS and maybe sit the rest of it in cash. DXD is the next one. And if you look at this, same thing. Same picture because these are all the same setup basically. Okay, DXD is the inverse ultra short fund for the Dow 30. So if we've got a bear market on our hands, well, this is how you can trade the Dow while the Dow goes down and you could still be in a bullish position. And our target on that is around 72 as well. Okay, now there's other targets between here and there, but that's kind of my ultimate target that I think we could be at in 6 or 8 months. And then the other one is QID. I'll write these on the screen in case you can't see them. QID, same thing, and our target for this is just over $32. Okay? Now, how do you want to play this? Well, there's a couple ways you can play it. One way you can play it is to buy the ticker symbols. Okay? This is one way. And those tickers are QID, DXD, and SDS. Now, I want to say this, and I really want you to hear me. Please. I don't like to make these kind of forecasts and, throw tickers out, and I don't know what you guys are doing with it. So I'm taking a big risk in doing this. I mean, I'm really trusting you to not misquote me, and I'm really trusting you to hear the full analysis because I've done the analysis. Don't go out there and take a third of your account and put it in QID, and a third of your account in DXD, and a third of your account in SDS. I did not say to do that. I'm very explicitly saying do not do that. Because if you do that, that's basically the same as taking 100% of your account and putting it all into one trade. Because all three of these are going to behave basically the same. You might want to take a percentage of your account. You could decide what that would be. Maybe it's 3 to 5%. Maybe it's 10%. Probably not that high, but maybe. You might want to take a percentage and say, I'm gonna buy me some SDS or DXD or QID. Or maybe you diversify. Maybe you take 10% and you split that into 3. That makes sense. Or what a lot of my students are doing is they're buying long-dated call options. Now, if you don't know how to trade options, then you shouldn't do this. But if you know about long-dated call options, you can buy these positions with, several months, 9, 10, 12, in some cases 24 months to expiration. So really what should be this entire bear market, you can actually buy those long-dated calls, and you want to do a call for this. Even though we're thinking the market's going down, these trades we're thinking are going to go up. And you can buy those for a couple dollars a share, $2, $3 a share. So would you rather risk $2 or $3 a share and buy, a few contracts of that? Or would you rather risk $20 a share and buy the ETF or SDS at $42 a share, $41.50, or DXD at $45? So it's really up to you. And I'm not even saying you need to do this. You have to decide what's right for you. I'm just giving you some ideas. I'm giving you some choices and some hope. That's really all I want you to have. I want you to realize there's an opportunity for you to actually be proactive in this move. So there's my forecast for you. I don't know that tomorrow is the day. I mean, right now, futures are, they're way on the downside. I mean, we're moving back down again. You're going to continue to see that throughout the night probably. And tomorrow, I think we'll get a real assessment of where this thing is going to go when the market actually is live. But throughout this week, be prepared. Be prepared for a lot of volatility this week. As this thing starts to roll over, if we really get the bear market, expect a lot of volatility. I have been forecasting since December that there will be at least one day where we have a 2,000-point day to the downside on the Dow. Why? I don't know. I just think that's going to happen. We'll see if I'm crazy. The point is not the 2,000 points. The point is the volatility. Be prepared for the volatility. And 2,000 points, that's it doesn't mean we're going to be down 2,000 points all day. It means that we'll have that much volatility intraday. I think that's going to happen. So just be prepared for it. Again, I'm not trying to tell you what to do in any way here. That's very much not the nature of this video. I'm just doing some analysis so you have an idea of what I'm thinking, what's going on. I know a lot of you, even those of you who are not members of Trade Maestro, a lot of you have wondered what my forecast would be. I've had a couple of you sent me some emails. So I thought I'd take the time to do this. I know it became a 45-minute video almost, but I think it's worth it. I will not do one like this every week, but maybe every once in a while I'll do one to kind of give you a little bit of an update and post it up so you guys can track along with it, okay? And then we'll see. Was I crazy? Was I just a nut job? We'll find out. We're going to find out really soon here in the next 2 to 3, 4 months. We'll see exactly how accurate or messed up I was in this forecast, but I think we're going to be pretty close. We've been very close since November, so let's see where we go from here. All right, folks, thanks for joining me. Thanks for watching this, and I hope it was helpful. Let me know. And, if you're not a member at Trade Maestro, then, feel free to check it out. And maybe it's time you start thinking about that. I do analysis every Sunday night in our profit picks class, where we go through some trade setups. We do this kind of analysis on the overall market, and then we go through some trade setups for the week. We're also starting to add in crypto to that. So if that's something you're interested in, then you can join us for the profit picks on Sunday nights. That is part of the membership at Trade Maestro. It's included with every membership. And then, if you're interested in trading crypto, I know that's not the nature of this video, but if you're interested in crypto, we've just released the 7-day crypto challenge, and I'd love to have you go through the challenge as well. So that's free. You can do that for free. So why not? If you're interested in crypto, which some interesting stuff there too. I'll do some more videos on crypto coming up. But lots of great stuff is happening. And just because things are maybe looking bearish, it doesn't mean there's not opportunity. There's always opportunity. As I like to say, there's more money-making opportunity every day in the market than you could do in an entire lifetime. Your job as a trader is to learn how to recognize those opportunities and then take action on them. So hopefully this video has been helpful for you. And until next time, happy trading to all of you. We'll talk to you soon.